Hi, it's John Browning from Guardian Rock Wealth, and we get the question all the time about should I take my Social Security early and invest it, and would I be better off doing that? And while people tend to really want to have a hard and fast answer on that, it's always this way or never this way, the truth is that it's fairly complicated, if not complex. But I'll take a few minutes today to try and give you some information, and that's all it is. It's not investment advice, just information about Social Security so that this can help you make your own personal decision. So the question again is, do I take Social Security early, say before my full retirement age, and then just invest the difference? And would I be better off than waiting and getting that higher payout from Social Security? And so here's a couple things to consider. Number one, if you are earning income right now, so you kept your job, there is an income limit there. You're going to likely have some taxes on your Social Security unless you're earning an extremely low income, say below $22,400 or something like that. So you'd want to take into account not just, yes, you'll be getting Social Security money, but then it's also going to be taxed. So you want to consider that. You also want to consider your income limit and whether or not there will actually be times that because you're working, you're actually still paying into Social Security. So that can be problematic as well because you then aren't getting sort of ahead of the game. Now, if you have decided to retire early and you're not earning that income, maybe you're earning some passive income, then it's possible that it might make some sense to take that Social Security early and invest. And then what you can do is potentially use that Social Security income for your living expenses while you allow your other 401k savings, Roth IRA savings, all of those things, maybe a life insurance policy, to grow while you're living off of that Social Security income for a while. And that can be a viable option and opportunity for you. The other really important thing that you need to think about and need to consider is how are you going to invest that money? If you're a very conservative investor, if it keeps you up at night when the market goes down in price and you're very conservative, then will you actually make more than you would make if you simply let that accumulate in your Social Security basket until a later date, say until full retirement at 65 or even waiting to 67? If you're a very conservative investor, it may be pretty difficult to actually beat the return that Social Security would give to you. So again, it becomes a very important decision, a personal decision that you need to make. And of course, we also get the bird in the hand theory, which I hear all the time as well, which is, well, I'd rather go ahead and take that Social Security now because it might not be there tomorrow. And everybody has their opinions on this. My opinion is that it's going to be very difficult for any elected official to get reelected if they were to do anything that significantly reduced Social Security. And I think, in my opinion, that the bigger risk is that taxes will increase. And that makes tax planning much more important potentially than when you take your Social Security. So I hope some of this is helpful and makes some sense here, but there's a lot of things to consider. You need to consider your modified adjusted gross earnings, not just your adjusted, your gross earnings that you get when you do your taxes every year. There's something called modified adjusted gross income, and that matters for Social Security. So I really do encourage you to speak to someone who is an expert in the field that can kind of walk you through your own personal decision when it comes to when to take Social Security. One more thing to consider and understand is that taking Social Security early can also impact your Medicare payments, how much you pay in Medicare. And remember that that calculation has a 2-year look back. So Medicare and how much you pay for your Medicare premiums are going to look back 2 years prior. to determine how much your premiums are likely to be going forward. So it's just yet another factor. So you can see how all of these puzzle pieces kind of go together and work together, and one moving just a little bit might completely change your picture. So we have what we call the tax lab that we plug all of your information into, and we're happy to do that for you. We do that for you actually free of charge at Guardian Rock Wealth. You can reach out to us at guardianrockwealth.com, or you can text the word LIFE, L-I-F-E, to 321-421-5213. And you'll get all of the links to all of our information. And there's a lot of other podcasts, the Building Your Life podcast out there, where we talk about Social Security and lots of other topics as well. Invite you to look into some of this information, learn what you can, but just reach out to us. We're happy to answer individual questions that you might have going forward. And some of these decisions, frankly, are very hard to reverse. So I do encourage you to get some professional advice and help from someone. And also remember your investment horizon. That's important because, again, it goes to how long you have before you're going to really need to start taking income for your portfolio. And one of the things that we often say is that it's not cash that is king, it's cash flow. And so if you have all of that put together in the right way, whether it's cash flow from Social Security or cash flow from your investments, whether they be passive or not, then you're going to be able to sleep well at night and not worry so much about running out of money in retirement. Again, I hope this has been helpful. It's John Browning from Guardian Rock Wealth at guardianrockwealth.com.